Hello traders, hello everyone, my name is Gregor and welcome to our new video Surfing the Elliott Waves, where I'll look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will look at the US yields, then also obviously dollar yen, euro dollar, cable, crude oil and the S&P 500 and also silver. So we have plenty of markets to cover. A lot of things is going on. Firstly, we had a hawkish poll on its testimony last week on Tuesday and Wednesday, but then this Silicon Valley bank collapse on Friday caused some fear on the markets. We have seen financials in the US trading significantly to the downside, which somehow firstly pulled stocks down as well, but not that much. And the reason obviously is that stocks stabilized later on because the Fed will not be that hawkish and aggressive anymore, especially if you have any kind of financial collapse going on in the US. So we know that in uncertain times Fed will not be hawkish, and this has also somehow been proven by the inflation yesterday, which came down to from 6.4% to 6% as expected. So again, another reason why Fed may not go for 50 basis point increase on next meeting, but rather they will stick with 25. Okay, so with that being said, this is the main reason why the US yields have seen an aggressive turn to the downside. But when you have the US yields turning down and also a weak stock market like we have seen on Friday and then also at the start of the week on Monday, usually that's the perfect combination for the risk off flows. So in such case, you will see most likely Japanese yen being trading very sharply to the upside, while safe havens like gold will be seen very attractive by investors and speculators. Now, looking here at the 10-year US yields, notice that I'm observing this corrective wave 4 of the higher degree, and we could go back and even retest these levels from 2018 highs. It's a little bit more than 3% here. And the reason why I'm looking for this is because this trend line that can be broken here, it was already retested. It suggests that wave 4 is a little bit more complex. This can be a bit tricky, but because tricky in regards of what kind of pattern wave 4 can form. But since we have a very aggressive sell-off, it looks like an impulse on the intraday basis. I think that this wave 4 could definitely see more weakness. Looking also at this 10-year US notes. Obviously, notes are pointing to the upside. Notice that we completed wave B after these first 5 waves up for a wave A. So very nice retracement, but stopped at the 78 and 61.8% FIB. And now it looks like that there is room for this equality target around 118, but at some point maybe even we can retest this former wave 4, because we know that when we are tracking the higher degree wave 4, the price can retrace into the termination point of a lesser degree wave 4, which is here. So there is still plenty of room for more upside, but at least in the short term we should clear out this wave A swing high. So now when we have these analysis, we know what we can expect from dollar yen, right? So looking at dollar yen, well, we are already turning to the downside. We highlighted this potential resistance around 137 to 138 a few times in our past analyses. We are also observing left shoulder, right shoulder, and that was ahead. So far we are trying to fail here at the 38.2%. Very nice sell-off here. And also this sell-off is coming after the Japanese yen futures came down and filled this gap here back from mid of December when we had this rollover contract. So normally at these rollover dates you will see obviously gaps because of different prices, but more importantly at these rollover gaps times or dates, you will see that there will be plenty of portfolio adjustments, and that's why this timing is very important, because traders, investors go out from old contract and roll over into a new contract, and that's why this dates, these levels around these dates are very important, especially if we retrace back towards this area, because obviously maybe some new adjustments will have to be will be needed in that same area. Okay, so I'm looking for this to be as a potential bottom here of this correction. So we have seen a very nice reversal to the upside. Looks like that we can travel even higher here. Now, as you know, you have also still a yield curve control in play from Bank of Japan, but there are speculations that this will probably be removed sometime this year, maybe when they have a new Bank of Japan governor after April. So there could be some interesting speculations for potential Japanese yen strength, especially if we consider that, as you can see here in green, inflation is coming to the upside. So I think that there is still plenty of room for this year for this pair to turn to the downside. Recently, we also have seen this broken trend line. I know that we don't have any clear and still confirmed completed correction here, but so far this appears to be like an impulse. So even if that's going to be at some point only a corrective decline, okay, I still think that there is going to be more weakness after this wave B rally. It may be already at the first resistance. If we go a little bit more complex here, then still could see 135.70, 136 to be retested and then sell off. So at least in the short term, after this rally, I'm expecting more weakness. Now let's take a look on the euro dollar. So ECB, however, they have a new rate decision tomorrow. 50 basis points could be seen. There was even earlier last week, there were expectations that on next meeting there will be another 50 basis point. Then we have this this situation of when financials move to the downside in the US, and there's a new speculation that maybe ECB will not be that hawkish like been saying for the last few months and weeks. However, some of the ECB members earlier this week, they highlighted that they're not concerned about the situation in the US, and this somehow signals that they are going to stick with the current plan, with the 50 basis points. However, this can very quickly change. We certainly know that a lot of global economies depend on what is going on in the US. One central banks will follow the other central banks as well to some degree. So I still think that they could be a little bit less hawkish, I should say, like compared to the previous meetings. So with that being said, keep in mind that there could be a resistance not far away on the euro dollar. I still think that this could be the first leg of a higher degree correction, and that you are now in a wave B. Could be a flat, potentially even wave B could become a little bit more complex, and we can see retest 108. 108 is important because that was the February 14 when we got this USDJPY data, when market unexpectedly spiked higher and then turned to the downside. So it looks like that in that area there were plenty of short orders. Now new levels of potential stops that are of the shorts. So obviously if we can clear those out, that's when, unfortunately, that's how the market functions, that's when we could potentially see a move to the downside. So a lot will depend on the US CPI. We have also retail sales and PPI figures from the US today, so this will be another indication of what's going on with the inflation. But generally speaking, I think that euro dollar is in corrective phase. I know that this somehow will be a limited correction, but at this point still potentially room for more weakness to retest this 104.80 from the start of the year. Okay, now, but afterwards, of course, I will expect a new resumption higher. Now let's take a look on pound. Pound, as you know, has seen a very nice and interesting bounce last week. It finished one of the strongest and is still holding up quite well. And if you were following our analysis recently, you know that we've been looking for this to be a correction from December highs. And what I like about the recent reaction here, let me look to the 4-hour chart, you will actually see that we had this very nice, okay, I will go to deal with this one. Very nice spike, just a small one. Let me do this. Okay, just a small spike to a new high here, it was back in January, and then market reversed to the downside. And last week I've been looking for something similar to happen on the lower side here. So we had a very similar pattern here, and normally this kind of a price action, this kind of activity will occur in flat corrections. And I've been tracking this flat correction since February, I think, and so far we had these very nice 5 waves down. Also, we have seen this move coming out of a triangle, and we know that moves out of a triangle are finally in the sequence, right? So it's not a surprise that this market reversed higher, and more importantly, we are seeing a very strong explosive move to the upside. So I see this as the first impulse, either wave A, can be even wave 1, so more upside after wave B or wave 2 pullback. Okay, so I will be looking for more gains here. Very nice support clearly is going to be, if this trend line is retested, maybe around 1.2 level. That was also the Sunday gap. So this level can be very attractive for a next bounce to the upside. So I'm expecting more gains here on pound as long as the market is trading above the invalidation level. So if we're looking to play the dips, this is the level to look for. We should not see this level crossed. If broken, then obviously something else more complex is going on here. But for now, this looks like a very nice solid structure for more gains after the setback. Now let's take a look on crude oil. Crude oil also turned very nicely to the downside as expected. As you know, we've been tracking this triangle for a while, and finally looks like we have this breakdown. So watch out for more potential weakness into the wave 5 from this triangle. We are looking at this 62 to be pivot maybe for this year, where the market could stabilize. Again, we are coming out of a triangle, so we can assume that maybe this is really going to be the final part of this downtrend, because keep in mind that in triangles, investors, traders, speculators get a little bit nervous, confused, okay, and normally they will try to give up when you have this kind of a pattern, okay. They will try to give up and say, okay, we will wait on the next breakout. And what happens when the market actually breaks to a new low? They said, okay, the breakout has resumed, we go much lower. But that's when this sentiment comes in play, when you have an increase in sentiment and increase in, I should say, in pessimism if the market is in downtrend. And that's when actually we should be aware of a new change in cycle. So when something is just too obvious that everyone sees it, keep in mind that maybe the opposite will sooner or later occur. So keep in mind that I'm looking here for the fifth wave, and I will be expecting a reversal maybe from 62-65 area, maybe even higher, but we are in a fifth wave for now. Still slightly room for more weakness, and that's the subdivisions of this triangle that I've been tracking. So bearish level already broken, so I'm looking for more weakness. We should definitely stay below 77 at this point. Okay, so as long as we are below that level, I think that more weakness could be seen. If suddenly we rally and then even close back above this broken trend line, then even more choppy price action will resume. But still, I think that we should be aware of more weakness here, lower into the fifth wave. Okay, for now we are holding just this support here. It's the April contract, by the way. Okay, now let's take a look on the S&P 500. So the S&P 500 here, well, I lost some of the levels. Okay, now the S&P 500 is so far moving very nicely to the downside. We've been looking for this reversal lower, even if just temporary, after failure break here above, that was above 41.70. Okay, and the reason why I was looking for temporary resistance here, because VIX back then was trading at these supports, so there were plenty of optimism back then, no fear at all, because the VIX is the fear index, was at the lows, so there was no fear, and market was actually looking for break to the upside. There were plenty of confidence that we will see break to the upside, because at the start of the year, as you know, there were speculations that Fed will stop the hikes. But then we got these new inflation figures reported for January, which showed actually that hawkish Fed should remain the cards, because inflation is not over yet. But now what we are seeing is that VIX is waking up after this financial collapse in the US. We are seeing prices moving into the closely to the upper side of this 2022 range. So whenever we are headed back into this area, that's when we should be aware that maybe the fear is going to be at extremes, and normally that occurs when the S&P 500 is always obviously at the support. It's been the case each time for the 2022. So again, I'm not sure if this situation, when we'll have VIX trading around maybe 34 in that area, will maybe S&P 500 already be looking for support at 3770, and then we can expect rally, or maybe will this occur from a new low. For now, I'm still looking at 3770 as a very nice potential support here, because as I said, I'm looking for potential flat correction. Okay, so I'm looking for potential spike 3770 and then rally. So here we are looking at this flat. You have these 3 waves down for a wave A, very nasty overlapping correction here for a wave B, and that's the 5-wave drop. So far we can already count 5 waves down, but not really convincing by this recovery. It's not really impulsive in my opinion, so watch for another retest, potential retest of 3786 and then a recovery. Okay, so key support 3770, 3780, key support for the next bounce. If we can rally from here in 5 waves, then you know that I would turn aggressively bullish here. If not, and we just keep moving lower and see a daily close to 3600, then obviously I will have to go with the bears and even at some point be prepared on this drop below 2022 levels before market will stabilize. Okay, this would be a real shock, and we know that aftershock, PPT and also the Fed members will step in and will try to limit the weakness here on the markets. And that's when actually we should be ready. Now let's take a look also on silver. So as I said earlier, whenever we have uncertain times, yields coming to the downside, watch out for metals. Okay, especially if that's yields are coming, selling off at the same time with stocks. So looking at the silver, we have a very nice reaction higher. We also had a very nice, pretty strong recovery here from 2022 lows towards this upper side of this channel. And this reversal, this bounce is very strong. Looks like we have this bullish daily candlesticks formations. Okay, you can see first, second follow through, and now just consolidation here. So if we can stay sideways here for another day or two, I think that this will build just a micro consolidation before market moves even higher. So looking at the 4-hour chart, this is what I'm looking at, expecting minimum 3-wave rise. Why minimum? Because always I have to be somehow careful, not predicting markets too long into the future. Okay, just want to go step by step. And always when you are tracking, let's say market is in a downtrend and you're tracking and expecting more weakness, right? Well, then corrections will be in 3 waves before the market will resume down. So this would then be labeled as A, B, and wave C. And now let's assume that market has moved to the downside, then reversed sharply, and you expect that market will continue back above the previous highs. Okay, so in such case, you would expect that market will make 5 waves to the upside. But notice that in each case, even if it's a 3-wave rise with minimum upside, or even better, a 5-wave rise, in each case, you will see this 3-wave rise minimum. So that's what I'm expecting here. Even if that's wave A or wave 1, we should see more upside after wave B, wave 2 pullback, either into wave C, ideally maybe even into the wave 3. So in both cases, as long as we are trading above 1988, I think that there can be more upside, because that's the first very strong impulsive reaction. We also broke this first bullish level at 2130. So I think that there can be more upside, because clearly this bullish reaction validated any bearish calls. So what I'm looking at is probably towards 2250, 2275, which was also the swing zone here when you look back at January levels. So this is the upward projection here after the next pullback. But sometimes markets will just keep straight to the upside. So in either case, I think that at least in the short term, metals could do well. Traders, thank you very much for your attention. I hope that you enjoyed this video. If you're watching us on YouTube, please leave us a commentary, ask questions about these analyses, press a like and support us so that we will make more of them in the upcoming weeks. Okay, traders, trade safe. Bye.